Right. So I did a market execution on this one.
Oh, you did, yeah? Okay.
As soon as I sent it, I spotted this second leg here.
Oh, okay.
And then I think as this candle was still open, I just entered it one time. Right. So
Okay, let me, yeah.
we still have an opportunity. You can enter, you can have your sell stops after the closure of this candle. Let's see how this candle is.
I was thinking this one was actually the first leg. That's why I was waiting for it to create the second leg and then go in. But you observed it right because the first leg is already established, right?
Yeah, if you look at this
Yeah,
one here,
yeah,
how I was looking at it, I saw this one as being the first leg here,
yeah, correct. Yeah.
right? This pullback here, back to these highs here, back to this London Asian high, right? So this is our one of our candlestick patterns that we look at. This one here on the second leg,
Yeah,
all right?
yeah,
So
yeah,
immediately I spotted this, and looking at
yeah,
the time, it was
yeah,
7:45, just
yeah,
minutes to the New York market open. And then
yeah.
I said this could be an opportunity for them to continue going back down. So there are two things that can happen here,
Hmm.
right? So if you're not
Hmm.
already in,
Hmm.
just a minute. Yes, Victor. Okay, let me call you in about 30 minutes. Okay. These are two possible scenarios that can happen here, right? Because the New York stock, the equity hour has not yet opened,
Hmm.
right?
Hmm.
There are two possibilities that can happen here. This being a good setup, yes, it can continue dropping, or during the equity hour, they can give us a stop hand back to these highs, yeah?
Yeah.
Just now, let me clear out this.
Actually, that was what I was.
This is our first opportunity here. Just in case they come and repeat these highs here, take out these highs here, it will be a better opportunity now for you to engage it for a sell. This is a possible thing that can happen. Right? This is a possible thing that can happen. They come, they repeat these highs here, issue a new candlestick pattern for a sell, right? If they continue dropping, this is 8:15, right? If they continue dropping, the other opportunity which is possible is, right? Remember the pushes we talk about.
Yeah.
That would be the first push there. We wait for that pullback, right? And then we go for the second push and the third push.
Yeah.
Right. So for this case here, you can, someone who wants to enter this one can enter sell stops at this level here. But your stop loss will be too high, too wide.
Yeah, that's what I thought. Yeah.
Right? Your stop loss will be too wide, 60
Very
something
high.
pips. All right. So if we get the pullback coming back to these highs, that is a better entry that you can be able to get.
Yeah.
Right. This is on GBP USD. Right, GBP USD came back and repeated the same high at the equity hour market open. All right, so remember I had entered early. I got stopped out at break even on this one here. So this is what they did. That was the first initial pattern that we looked at, and I'd taken an entry, and our suggestion, like, let's wait for the price to come back to that high. When they issue the second leg, then we can engage it for a sell opportunity. I guess some of you are paid attention to it and you were able to engage on it, and it was a good trade for some of that was taken actually this day. All right, personally I did not engage it after being stopped out at break even because I had other engagements, but let's see what the dealers have to do with us tomorrow, Wednesday. Right, so just take a lesson from this. The equity hour is very key in the market, right? The equity hour is very important. So there are two options. Either the market could have continued selling or get this top hand just like the way we had it, and then the market continued dropping. All right. So that is it, guys. This is what happened on the market, and I hope you get to learn something from it, as this is a market review. And let's see what the dealers have for us tomorrow on Wednesday. Keep safe.